morning and welcome to 3 Minutes on Markets and Money. I'm your host, Lance Roberts, and let's talk a little bit about a few things that are going on in the markets right now that are important. The first is that last week, the market failed to break out of its June highs, and there's something that we've been watching here for a bit of time is potentially for this consolidation range that's been intact really between the 200-day moving average and the June highs for the market to resolve that and make a push potentially higher. But on Friday, this breakout that had started actually failed. We fell back below that June high level on Friday. At the same time, we also triggered our money flow sell signal. That doesn't mean that the markets are about to crash and have a big decline. In fact, the last time that we had the money flow sell signal was, guess when? Back at the June highs. And what's happened since then is basically nothing here. So the market's basically been this big consolidation. We worked off that money flow sell signal, had a money flow buy signal. Nothing much really happened here, but now we're back on that sell signal. So again, doesn't mean the market's potentially crash, but it does suggest that because money flow is weakening and we're about to trigger a sell signal on our MACD as well, is that we're likely going to be trapped here, continued between the 50 and 200-day moving average and these June highs at least for a while longer, and particularly as we now begin to move into the month of August and September, which typically tend to be weaker months anyway. There is risk to the downside. I don't want to delude you with that. And there is risk here back to the lows that we saw back earlier here in April and May. So there is downside risk to the markets currently. Markets are very extended. And as we get further into August and September, weaker economic data will likely show up as well. A lot of this is potentially hinging also on Fed stimulus as well as, of course, government stimulus, more checks, more benefits of unemployment insurance, etc. That could all begin to weigh on markets here short term. So pay attention to the markets, particularly now that we have the money flow sell signal in place. A couple other charts that I want to get into this morning also very quickly, of course, is the dollar. This has been a big talk here of late, is that the dollar is weakening and we're now about to have this major dollar collapse. Another chart to pay attention to here is the dollar. Lots of talk here recently about the weakness in the dollar, and the dollar is going to go much lower here in the short term. That's not likely because the dollar is extremely oversold on a short-term basis, and we're very close to getting a money flow buy signal on the dollar, which suggests at least a reflexive rally in the dollar back to the 50 or the 200-day moving average here. Now, it's not a big move, but the dollar doesn't make really big moves anyway. But again, a counter trend rally in the dollar at this point is very likely because of the extreme oversold condition of the dollar. And that's going to have a relationship on, of course, bonds as well as gold. And we'll get into these, but bonds have been performing extremely well here. The Treasury has been really a kind of a safe haven push, even with the market struggling here as of late. Money's been flowing into Treasury bonds. And when we start talking about gold, there's been an extreme run up in gold, which corresponds with the fall off in the dollar. If the dollar does reverse here, we're likely to see a bit of a contraction in gold. Gold is very extended at this current point, very overbought, and there's lots of exuberance about gold itself. Doesn't mean that gold can't keep going up longer term, but as with all things, when things get extended in one direction, you tend to have a contraction, at least short term, to allow it to reset to go higher from there. And again, a counter trend rally in the dollar, which would be expected because it's so oversold, would lead at least to a short-term correction in gold. So these are just some things to pay attention to. We've got lots of things kind of counterbalancing within the markets right now. Maintain your risk hedges, of course. Be a little bit cautious here. With the money flow sell signal now in place on the S&P, suggests that we'll have weaker markets at least over the next few weeks, if not the next couple of months. So maintain your exposures accordingly. If you have any questions, get by the website, realinvestmentadvice.com. Let us know what we can do for you, and we'll see you in the next edition of 3 Minutes on Markets and Money.